Hey, Tej here. Today we're taking a look at technical analysis for SP500. I'll cover web analysis with Elliott wave theory and provide multiple scenarios the price may take and explain why I prefer one count over another. Let's take a look at the different possibilities. Starting here on a 30-minute time frame and using the SP or ES1 futures or E-mini futures and the SPX on this video. Let's start with the bullish scenarios in which we have this as a wave 1 here. Then wave 2 and then looking for wave 3. At this point we can be, as this is the bullish count, we can be more bullish overall. We can have this as a wave 1, 2, very short and shallow wave 2 pullback, less than 38.2%, and then we can have another 1, 2, 1, 2, 3, 4, 5 into third, fourth and fifth, looking for the first again wave 1 of this sub-micro count here. So currently I would expect us to get even one more high, even though we have been having these bearish divergences all around. I wouldn't be too surprised though if we are going to pull down, as that would be supporting the more bearish count, in which we don't have that extension here of another wave count as a 1, 2, 1, 2. If however we are going to go or stay below this 1-to-1 extension around $4,200, then it is possible again that we are going to have another 1, 2. This is going to be making this a very bullish count as 1, 2, 1, 2, 1, 2. And again, at that point we need to be considering if this is any viable anymore, or believable at that point. But that is the bullish count on ES1. Let's take a look at that same scenario here on SP500. Now, same scenario here, 1, 2, 1, 2, and another 1, 2. Now, this is quite a bit different here to the SMP or ES1, where we had this as a 1, 2, 3, 4, 5 here. Instead, on the SPX, we would have this as a 1, 2 and another 1, 2. However, due to the wave structure we have here, I can't really place that on the S&P 500 charts or SPX charts, and instead we would have this as another 1, 2 here. This is even more bullish generally. However, again, as it is a bit different, we would have this as 1, 2, 1, 2 here. Same extension targets basically here on SPX, and then another 3, 4, 5 into third, fourth and fifth. Again, this is the bullish count. At this point again we would be looking for third of sub-micro and then fourth of sub-micro. So according to the SPX here, we would be doing at least one more high here for the fourth and then even fifth for the third of micro, before getting into the higher degree wave structures again. So even with this count, we have already had the most targets hit basically on this move. So we need to be starting to be careful if we want to be longing into these smaller wave structures up higher. Now the best scenarios, we have this as an A, B and C. As we are looking this as bearishly as we can have this as 1, 2, 3, 4 and then last leg of fifth. Here again, wave 3 is barely larger than wave 1. It just goes beyond the 1-to-1 extension of this first move. But again, it is legal. Wave 4 does not get into the wave 1 territory, so that's fine as well. In here on the wave 5, we could be expecting an extension, as we did not have that on the wave 3. So here would be the targets overall. 42.18 is one of them. Of course, we'll see how it turns out if this develops any higher. Here we can't really have this as a 1, 2, 3, 4 because this structure here on SPX is smaller than the previous structure. So that's why we have to have this as a 1, 2, 1, 2. That is completely different on ES1 or the futures market, where we can have this as a third and fourth as well. But I'll show you that in just a moment. In this again, minuscule 1, 2, 3, 4 and 5 into third or sub-micro, and then looking for that wave 4 mess here again. Coming back to these previous or these target areas here. I've labeled this as the wave 3 and 4 of this minuscule count here. So we are still currently around that area. I wouldn't really like us to see us go below the current levels. Otherwise, it has the risk of not having a good look anymore. I'm not quite sure what this is here. I can't label this as a 1, 2, 3, 4, 5 because the third would be here, the smallest. It's definitely going to be very hard to label any structures inside here. So that's why I'm not doing that at all. Overall, we do have that divergences happening here between third and fifth, which would be expected. However, we do have that divergence here as well between the first and third, which is not typical. Let's take a look at the same on the S&P 500 futures market. And here is basically the same thing, A, B, and looking for that C. Here we can have that 1, 2, 3, 4, and in the futures market again, we could have this as a 1, 2, and 3, 4, as we had that larger spike here on price here coming up. But yeah, it can be labeled as a 1, 2 as well. At that point, we would have less bullish structure overall in here. Definitely don't have an extension here on third, so we can expect that on the fifth here as well. So these are again the same targets. One more count that I had to show is the WXY count on instead. And for that, we would have ABC into W instead of a 5-way structure that I had, for example, on S&P, the futures markets. Here we would have again 1, 2, 3, 4, 5 as an expanding leading diagonal, which is again a bit more rare than just a common ABC zigzag. Then 3-way pullback into wave X, and then again 1, 2, 3, 4, 5 into an A wave, 3-way pullback, and then again 1, 2, 1, 2, 3, 4, 5 into third, fourth, and fifth. So this would look for one more high according to this labeling. Is there other ways to label? I would think so. But to me, this looks pretty okay as is. If we are again breaking these highs or these lows currently, then it is starting to look a bit more bearish. If we're looking at some bullish ideas here, we do have this channel coming down though. We can have, for example, these highs or these lows here, having a bullish divergence here, hidden bearish or bullish divergence between these two lows. So we could be comparing those, or even the let's see, where's the wave 2? Right here, of the same degree. So this wave 2 and this wave 4 here of the same degree, and we could have that divergence seen here. So it is possible still that we are going to be getting that fifth wave, and I would be expecting that. Again, what we are looking for here, let's say on the 15 minute, we would be expecting to break this trend line here that we are having, and then pivot higher. Generally, again, we would be looking for some kind of divergence between this wave 5 or the third wave on higher degree, which would be actually, I think it would be here, as this is choppy wave. This was this wave structure. Let me zoom in. This most likely a 3-way structure here on ES1, so the futures market. So this is very choppy move. Doesn't look like 5 waves, so better to label it up here. And so we are expecting a divergence between this peak, so higher price and lower RSI to get that divergence in. But yeah, that is pretty much everything I wanted to cover on S&P 500. At the moment, I'm still looking for one more high here. If we are going to be breaking these current lows downwards, just below these ones, then I would have more bearish bias overall, and then I probably have a wrong count here as the as an impulse wave structure. But yeah, that is pretty much everything I wanted to share today. If you made it this far into the video, I would appreciate the likes. Link to my free Discord server in the description below. And for now, I thank you for watching and hope you have an amazing rest of your day. See you in the next video. Bye bye.